the dollar lag, Fed developments, whether we gravitate toward 50 or 25, depending on payrolls, that'll be the ultimate key for dollar yen prospects. And I do think all the signs point to a dollar yen ultimately trading through 140. But yeah, in terms of the new Prime Minister, I think we're going to go through several iterations here. And I'm not sure we yet have absolute clarity on how to trade dollar yen around Japanese politics, because we know the new Prime Minister historically has critiqued the BOJ's aggressive monetary easing. And we know he favours fiscal consolidation. So that all speaks to a weaker dollar yen. But then on the weekend, there were some press reports that he was, it sounded a bit more dovish. So we need to go through several iterations here. I think one thing is absolutely clear here that, with the Fed cutting rates, the BOJ is still inching toward normalization. Dollar yen won't necessarily trade at lower levels today or even this week, but multi-month, the prognosis for dollar yen is pretty clear-cut for me. And that's
got it. Richard, we have BOJ Tankan on Tuesday as well, which will be interesting. Turning to the geopolitics, the Middle East, as we know, is on a knife edge, given the non-negligible risk now of a major escalation. Depending on the headlines and what they tell us, is it dollar? Is it Swiss franc? Is it the Japanese yen? Where could the safe harbour bid go?
Right. I think the dollar's lost some of her safe haven attractions, if only because we've got a Fed that's now pivoting toward rate cuts. The dollar enjoyed this very rare mix for some months there where the Fed was still hawkish. They were wanting to take their time around pivoting toward easing. And so the US had the highest yields in the G10. And then when Mideast hostilities picked up, the dollar was the natural safe harbour. It still is. But at the margin, the Fed rate cuts are just undercutting that slightly. I fully expect a combination of yen, Swiss franc, and dollar strength in varying degrees to come through if Mideast risks escalate, as they seem to be. Whether we ever end up in a situation where there is direct confrontation between Israel and Iran is the big X factor for global markets. The risks are certainly moving in that direction, and if it were to be the case, I would expect a fairly rapid unwind of risk positions. And the dollar should enjoy safe haven gains. Swiss franc would certainly against near geographically close by currencies, and the yen in our region, our time zone, would of course be a major beneficiary too.